Joining us for a look at today's markets action is Anthea Gardner from Cartesian Capital. Anthea, happy New Year to you. Thank you for your time this afternoon.
Hi, Nolo. The best for 2024 to you too.
Thank you so much, Anthea. Getting right into it, we finally see that U.S. inflation print. I think markets really trying to make sense of it. I'm keen to get your thoughts on it.
So the market certainly did not react the way I would have expected with this higher than expected or estimated CPI print came in at 3.4. We were expecting 3.2, which is already higher than the previous 3.1. But I do have to point out that the core inflation number was actually lower than expected. And I think what we're looking at is the trend. So when I saw the number yesterday, I said to my team, oh my goodness, watch these equity markets puke. And they asked me if that's the official term, right? So, roll my eyes at that. And then the market didn't. You know, we saw the Magnificent Seven bounce again last night. And then the rest of the market was flat, a little bit negative, but overall the market was flat. Our market even closed higher yesterday. This morning is a slightly different story, though. So I think that from the equity market, it feels like it's looking through the single data point that we've seen it do historically. What is interesting, though, is that the forward rate markets, they were pricing in an 86% chance of a March rate cut, and that fell to below 50%. So I think the fixed income market is looking at the inflation number and going, oh, higher for longer, here we go. But the equity market, not too bothered. You know, the Fed has said previously that the inflation fight is not over. They cannot declare a victory. So I think that's what equity traders are hanging their hats on.
I'm glad, Anthea, you mentioned the Magnificent Seven, because I'm keen to get your thoughts on what we're anticipating for these stocks in 2024. 2023 was a bumper year for them, and I'm wondering if it's possible that they've peaked, possibly topped out, or is there just more, for these big tech companies?
I'm loath to make predictions, I really am. And I think mostly the market is expecting the Magnificent Seven to flatline, you know, this year, not turn negative, because it's as if they are the new normal. So if there's anywhere to go, if what's happening in the market or the economy is going to reflect in the equity market, then the Magnificent Seven are going to stay magnificent. For me, the risk is that that doesn't happen, is that these stocks come off, because then where are we going to see the share price, the shares push the indices higher? And that's the question for me. I can't see a negative move in these tech stocks, honestly, not this year.
I'm also keen to get your thoughts on what we're seeing in the Red Sea here. And I mean, this whole inflation picture, of course, towards the end of last year, we were not speaking about an inflation victory. As you said, the US Fed has said that. But globally, we are seeing this issue with the Red Sea. It's escalating, I think, even at this point. And I'm wondering if it's a risk that markets have already reckoned with, or if we're yet to see it pricing in.
No, it's definitely not a risk that the markets are pricing in. I think the consensus was that the Middle East war would somehow come to an end. And there's a lot of pressure, you know, internationally for Israel to stop bombing Gaza. And even, you know what South Africa's doing, taking them to the criminal court. And then last night that happened. Oil is already up $2 this morning, which is about 2.5%. The oil share currently down, well, earlier on it was down 20 basis points. I think it's recovered a little bit. And I think that is an indication that markets are nervous about any escalation in the Middle East, any Middle East, US, or Eastern Europe, US, any kind of war at the moment. I think we're still a little bit traumatized from Russia, Ukraine. It caught us off guard. We thought it was going to be quick. It lasted and still hasn't ended. And I think market participants are wary of that. So they're cautious at the moment. And I think you'll see US equity markets come off this afternoon because of exactly that. They just don't know what's going to happen.
With that said, Anthea, do equity markets often price in geopolitical tensions? We are seeing just a more fragmented world, aren't we, where geopolitical tensions are mounting, and we are also seeing a bit of a polarization. And I think I've even heard the word deglobalization, being thrown around here. Is it something that is of concern to equity markets?
Oh, absolutely, and it's because equity markets dislike uncertainty. And if we don't know where we're going, and don't forget, markets are always trying to price forward. They're not pricing for yesterday or today. They're pricing for a year forward. And if we don't know what's going to happen going forward, if we don't have some sort of certainty, then the markets do come off, and market participants tend to sit on their hands, and then the bears take over, basically, is what happens. So geopolitical, definitely real risk factors. Deglobalization. Now, this is an interesting one because already we've seen a lot of trade go from the US into across Asia. So you've had this move from transatlantic trade into Asian trade. So kind of the Middle East, Asia, Eastern Europe, more trade is happening there. And I think that's a trend that's been going on for a couple of years already now. And it may escalate is the wrong word, but it may increase.
We'll be watching that one, I think, closely in 2024. I'd like to bring it back home now. It is rather quiet in our equity markets. I'm wondering what you are anticipating for equity markets in 2024. It's also an election year in South Africa, which means a lot of things hang in the balance.
So we love the fact that the South African equity market is so cheap at the moment, but we are so worried about this value trap, right? What is the catalyst that is going to push these share prices higher? And so you can almost pick any South African stock these days and go, oh, it's so cheap, and there is no doubt that in the future it'll be a higher share price. But what is the catalyst? And there's a lot of talk now about South African GDP increasing this year. So not a lot, so maybe from 0.5% to 1%, which is double, granted, but it's not nearly enough for the economic growth and the unemployment numbers that we are seeing in our economy. And if that's going to happen, then that would be great, because that would be a catalyst. The flip side, however, it's an electioneering year. And I mean, this is an interesting one now that I think about it. Actually, it's, we get the central banks to measure inflation and target inflation, but we don't get governments to target GDP growth. And now during an election year, their eye is completely taken off the ball. They're more worried about getting elected again in the election, getting voted in the elections, than they are about GDP growth. Now, maybe that's a good thing. Maybe we'll see less load shedding, which definitely will help economic growth. But I'm not that positive that we're going to see huge changes in the South African economy this year, which of course, to your question, translates into higher equity markets.
Well, Anthea, I'm keen to also look at some counters that you like, but before then, I'd like us to reflect on counters that some of your industry peers like.
Well, I'm going for Anglo-American Platinum. I mean, Anglo-Plat's topped out a couple of years ago at, I think, 2,400 Rand, and it hit a low last year of 630 or 650. Literally, by the end of December, it was up almost at 1,000 again, and now it's back at 840, 850. So I think this is another opportunity to go in and buy these platinum shares, because as I've said when you were talking about Teresa, I'm very positive on platinum shares on a 2 to 3 year outlook.
All right, Anthea, keen to get your thoughts on Amplats as a counter.
Couldn't tell who that was speaking, but
Wade McCurry.
It's an interesting. Oh, right, okay. So I'm in agreement, right? As I said, South African stocks are excitingly cheap, if you want to put it that way, at the moment. And we are worried about getting caught in a value trap. So Amplats is a share that really has come under pressure in the last year, definitely in the last quarter. But their product is a quintessential product, actually, standard product, computers, optic fibers, pacemakers, jewelry, catalytic converters. So it is a share that is likely to rally at some stage, when I'm not sure. And I think, unlike my peers, actually, I'm quite positive on Chinese economic growth. And I see if we see any positive news out of China on their growth numbers, we'll see a bounce in the share.
Keen to find out which counter you're going with this afternoon, Anthea.
So it's quite similar, actually. I'm going with Coronation Fund Managers. It's a local share. It's a brave one. It's one that's been under pressure. And again, a couple of years ago, we saw Coronation see a lot of outflows. And last year, when there were, I think the number was like $50 billion of outflows on the JSE, Coronation Fund Managers actually increased their AUM. back above the 600 billion rand mark, which I think is difficult to manage, but they've done well to beat their benchmarks in much 95% of their funds. I know they've got the SARS problem, this tax issue that they just can't seem to settle on. And I think even if SARS gets their way and Coronation has to pay a fine, that fine is slightly lower than the market's expecting. I think it'll help the Coronation share price. Not a company that's going to fall over, may not rally tomorrow or next week, but I think it's a company that is solid and worth owning in your portfolio.
Anthea, it's been a pleasure speaking to you this afternoon. Thank you so much for your time. That was Anthea Gardner from Cartesian Capital.